Sensex and the Nifty end flat after a range-bound session. The mid-caps underperform. Pharma stocks drag even as IT stocks offer support.
It's a big blow for miners. The Supreme Court allows state governments to collect past dues on mining from April 2005 in the form of royalty and tax. It, however, directs states not to levy interest or penalty on the past dues and collect them in a staggered manner over the next 12 years.
Divi's laboratory falls after Kotak highlights downside risk of a sooner than anticipated launch of one of their generic drugs. And MotoCorp skids after high material costs, dense earnings, even as the demand outlook remains positive. But Apollo Hospitals rises despite an inline performance on promise of improved margins going ahead. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you all the key data points about today's trading session and also set you up for the next session. That's on Friday. I'm Nigel D'Souza and joining me as always is Surabhi Upadhyay. Hey Surabhi.
Hi Nigel, very quiet session, right? If you look at the headline index, but then we always have lots of stocks to talk about and that's where the action was today.
Well, that's right. Well, in the next 20 minutes, we'll get you up to speed with all the big news, key developments on the Dalal Street, top corporate voices, and also we'll track some events you should be tracking out from here on. But let's tell you about today's session. It is a quiet day of trade. You were bracing for a bit of a volatile session, particularly in the last hour of trade. It was a dual expiry. The Nifty as well as the Nifty Bank, both of them played out the weekly expiry. Sectors that were in focus, the mining stocks were in focus because the Supreme Court has given the states the go-ahead to charge higher royalties, higher taxes on a retrospective basis. And some of the stocks got hit quite badly in today's trading session. Though to be fair, if you pull up the intraday chart of the metal index, you'll see there was a bit of a recovery from the low point of the day. The pain pocket, though, was the broader markets. You look at the advanced decline ratio, we had close to around 2 stocks that were declining for every 1 stock that was advancing. And that's seeing, maybe not big selling, but lack of buying, so to call it. And that's been the space that's really been outperforming. Weak earnings, there's no kind of breathing space out there. You report weak numbers, the markets are going to smack you. And that's happened today as well. Pyramid Enterprises was down 10%. HEG, the margins coming at multi-quarter lows, so that one as well got spanked, down 7.5% and 10%. No margin for errors.
No, absolutely none whatsoever. In fact, even a big stock like MotoCorp, the market was not happy enough with the numbers, and that really played out. But the one sector that managed to save the day for the bulls, at least in the large cap arena, was really the IT space, because by the end of it, a lot of the IT stocks ended on the positive side of the screen. All the biggies, TCS, Infosys, Wipro, all of them. And because of that, the Nifty at least managed a flat close. Otherwise, it could have been a very different scenario. So those are the big movers over there. But the mid-cap market has been disappointing. There's no two ways away, no two ways from that. The index finally ending with a cut of about 0.6%, and once again, second day running a very negative advanced decline ratio. So, yeah, that's something that we have to take stock of for sure. So let's get started and tell you what the lineup is looking like today. We will get you all the key movers and shakers of the day. Vivek will take us through the stock-specific action. The stocks on our radar include Hero Moto, Divi's, and Apollo Hospitals. All of these in focus on the back of their first quarter numbers. We'll, of course, dive into all the key reasons behind the stock moves that we saw today. Okay, so then let's kick off the proceedings with the movers and shakers of the day. Vivek is here with the highlights. Vivek.
Well, that's right. Very volatile trading session, especially when you're looking at the broader end of the markets. But like you've been mentioning, the one pocket of the market that did quite well in today's trading session was the IT pack. The IT pack, if you pull up, the top stocks over there, the IT index up almost 1.5%, clearly outperforming. Look at names like TCS, LTT, SHCL, Tech Infosys, all of these stocks actually outperforming. The second stock on our radar, from the broader end of the market is Chennai Petroleum. This particular stock, when you're talking about the NSE 500 index, ended the day with gains of almost over 8%, and volumes too here were quite strong. The other stock on the radar was Samvardhana Motherson. Yesterday, immediately post the numbers, you saw quite a bit of a sharp sell-off, but today there was a bit of a recovery after the management actually gave quite a bit of clarifications about some of the one-offs, and also the con call commentary in terms of demand was reasonably positive. Last stock in terms of the gainers was Policy Bazaar. This particular stock, that's PB Fintech, ended as the top gainer as far as the mid-cap index was concerned, up over 6% in today's trading session. But when you're coming to the losing side, whole host of losers there, and some of the stocks are significant selling pressure. Metal and mining stocks, like you just mentioned, that particular sector saw quite a bit of deep cuts. Look at names like NMDC, Hindustan Copper, Nalco, Tata Steel, JSL, all of them with significant cuts in today's trading session. The other laggard today was Pyramid Enterprises. Like you mentioned, weak set of numbers, downgrades coming in. CLSA downgraded the stock down over 10% in the session today. Divi Slabs, competition coming in, key drug for one of the company's customers. Kotak sees EPS cuts of close to 10%, as far as FY26 numbers are concerned. HEG, another stock where margin pressures, showed up, and that was a stock that also saw quite a bit of selling pressure on strong volumes as well. And PNC Infra, another stock in the broader end of the markets that saw quite a bit of selling pressure. The company actually cut its top line guidance, and on the back of that, that stock too ended lower by 5%.
Okay, Vivek, thanks a lot for that. Well, joining us on the show today is Ambareesh Baliga and Shrikant Chouhan of Kotak Securities. Hi, gentlemen. Thanks a lot for joining in. Shrikant, you go first. Tell us about the index first. It seems there is some nervousness looking at the screen. What's your view? We retest at 23,800 and then bounce back, or do you think this market wants to visit lower levels?
Yeah, what you're saying is right. I think this market is really under a lot of pressure. It is not holding at higher levels, but at the same time, it is consistently trading below important levels like 24,200, 24,400. After falling to the extreme levels of 23,800, we saw some pullback, but it was just a retracement to the sell-off that we saw. And now again, the market is, I think, of the mood to fall further. So yes, on the minimum side, we could see the levels of 23,800. But below that, we are expecting market to fall maybe to the levels of 23,200 or 300 based on its technical pattern. So till the markets are not crossing and reversing the levels of 24,500, I think we need to be careful in this market, or any pullback will be an opportunity to reduce long positions.
Okay, fair enough. All right, let's get started then with the stock-specific analysis. There was a lot of focus on mining companies today. In a major setback for these companies, the Supreme Court has allowed state governments to collect past dues on mining starting from April 2005. And this would be in the form of royalty as well as tax. Nigel, tell us what the impact could be and how big a blow is this potentially?
Well, that's right. The metal index took a sharp hit as the Supreme Court has allowed states to collect past dues in the form of royalty as well as tax from April 2005. The only relief is that the tax arrears can be paid over 12 years starting April 2026 without interest or penalties for the prior periods. Now, following the judgment, states can now generate additional revenues in the form of taxes on mining activities and also on the land used to conduct these activities. Let's move straight to the stock impact then. The biggest loser is Tata Steel, as it had provisioned 17,300 crores as contingent liability against the claims by the state of Odisha, if in fact it's applied retrospectively. This amounts to nearly around 10% of the current market cap, and the stock has been weak as well post the Q1 FY25 results. Hindalco, they told us here on CNBC-TV18 that if the taxes are levied retrospectively, then it's unlikely to affect them as they do not have any pending claims. We also got a reaction coming in from Rakesh Arora, who said that the companies with exposure to Odisha, Jharkhand and Tamil Nadu will have to bear the brunt, and said that the total estimate for overdue cess could be around 2 lakh crore, of which PSUs would account for around 30% of this. He also added that there might be some leeway given to PSUs by some states. And besides mining, he believes that cement companies who have exposure to Tamil Nadu in particular, they could get impacted, and those companies could include the likes of India Cements as well as Ramco Cements. Phillip Capital, they came out with the note. They say that all captive mines will be impacted and have quantified the impact at 2 to 6% on steel companies' market capitalization. While on aluminium prices, they believe the impact will be marginal at around 1 to 2%. They also put out this note and they said that the correction in the stock prices could be a buying opportunity on JSW, JSPL as well as SAIL, while they say that Tata Steel is the most affected from the cash flow perspective, followed by Hindustan Zinc as well as Vedanta. For now, Tata Steel is the biggest loser, but clarity is awaited on whether PSUs get some leeway, particularly Coal India, since higher taxes will result in higher power cost. Also, prospectively, which states will levy taxes and what is the quantum? That's something that the street looks forward to. So let's see how that plays out. Well, Ambareesh, I wanted your view on the mining stocks. And actually, there were pockets of the market that did well today. You had the metal index itself that was down more than 3%. It ended down, I think, only around 1%. So there were plenty of recovery in trade. What's your view?
See, I think clearly, this was coming, but we didn't know exactly when. And like companies like Tata Steel and others have already made those decent amount of provisions. So I don't think it's really going to hit the balance sheet in a big way. Since this has come now, we have seen a knee-jerk reaction. I think it's more or less done. Maybe the next 2 or 3 days we could see some weakness, but I see this as a buying opportunity. Say possibly either 3 or 4% more for these stocks, but then I think at those levels it should be bought from a longer-term perspective.
All right. Okay. So keeping the faith on the metals and mining space. Got that point, Ambareesh. Let's look at MotoCorp now. This stock was under pressure following the first quarter earnings print. Earnings were below street estimates. The bike maker's EBITDA and margins slipped on the back of higher material costs. Sonia is here with the fine print. Sonia, tell us more.
You know, the stock is under pressure because of a couple of reasons. Post the numbers, you realize that there are higher raw material costs which have actually impacted the EBITDA margin of the company. And the realizations have actually seen a very minor increase of just about 2% on a year-on-year basis. So if you look at the numbers, they are below what the street was estimating. The revenues have come in at about 10,144 crores, below street estimates. EBITDA as well at 1,460 crores, below what the street was estimating, and the margins as well at 14.5%. Now, the management commentary is that they did witness positive trends across the domestic EV as well as the global business. They are optimistic about the demand trajectory for coming quarters, but they also see inflationary pressures that continued in the quarter gone by. Henceforth, inflationary pressures are easing and the consumer spending power is picking up, so they are optimistic on that. Brokerages, Jefferies has a buy call with a target price of 5,650, but I think it is the impact that the higher raw material costs have had on the margins, which is having a reflection on the stock as well. Back to you.
Okay, all right, Sonia, thanks very much. Ambareesh, what's your sense? Hero Moto, is this a dip that investors should look at buying?
Absolutely, because if you're talking of the next at least 2 to 3 quarters, I again see the demand increasing going ahead. Basically, in the rural tier 2, tier 3 cities, I think we should see a robust demand going ahead. And as far as the margins are concerned, I also see that there could be some more further increase in the sale price. I think that should take care of the margins to a decent extent. And one good thing is, again, they've been one of those first movers as far as EV is concerned, and I think that should start giving positive contributions, possibly from FY26, latest FY27.
Okay, all right, gentlemen. Thanks a lot for that. But hold on, we'll slip into a snappy break. You come back, we'll continue with more stock-specific news. Don't go anywhere.
Welcome back. Well, we are looking at more stocks and more market action. This is Market Forward. So let's take a look at Divi's now, because it was among the worst performers on the Nifty today, slipping about 4%. And this after Kotak Institutional Equities called out a sell on the stock. So what is their concern? Let's go across to Ekta. It has to do with one of the key drugs that Divi's is developing. Ekta, fill us in on the details.
Well, yes, Divi's Labs is in focus on account of a Kotak note. They retained their sell call with a target price of 3,600 odd rupees. According to them, there is fear that there could be earlier than expected generic competition in a heart failure drug called Entresto, which is by Novartis. Now, why is this important for Divi's? Is because it is one of Divi's largest drugs in its CDMO portfolio. So according to them, there is a downside risk of a sooner than anticipated launch of the generic version of Entresto, and this has increased materially after US District Court ruling, which ruled against blocking MSN's generic of Entresto. MSN is a pharmaceutical company, so there is a likelihood that there could be increased pace of a generic of this particular drug entering the US markets. Now, Kotak has not factored in generic entry before second half of FY26. According to them, this particular CDMO contract that Divi's had for Entresto with Novartis contributed 8% of their total sales and 19% of their CDMO sales in FY24. If in case the generic competition does come in earlier, Kotak says that could lead to even a 10% downside risk to the FY26-27 EPS. According to them, valuations also are extremely expensive for Divi's.
Okay, all right. That's why Divi's was down. But Ekta, tell us why Apollo Hospitals were up post its numbers.
Well, yes, Apollo Hospitals came out with what was a largely in-line set of numbers. Revenue was up around 15%, margins 13.3%, and profit over 300 crores. Hospital revenues were up 15%, but the average revenue per occupied bed was up only around 2% this quarter, and that was because the surgical revenue was not as high as we've seen in previous quarters. The diagnostic margins came in at around 9% versus 7% year on year, so there was an improvement there. And Apollo HealthCo, which basically houses Apollo 24/7, saw its EBITDA come in at around 22.5 crores versus a loss of 56 crores on a year on year basis. The Apollo 24/7 GMV was up around 9% year on year. Now, in terms of the commentary, it seemed to be largely positive. So Apollo has said that margins are not only sustainable but will improve going forward. There is scope for improvement in Apollo Health and Lifestyle due to segments such as diagnostics. Hospitals could see 100 basis points improvement in margins in the next 4 quarters, and Apollo HealthCo could improve its margins by cutting losses and growing its offline business as well. According to them, the average revenue per occupied bed was up only around 2%, but is expected to scale up to around 7% growth in FY25. City, which came out with the first cut, has a buy and a target price of around 7,670. Macquarie underperformed with a target price of around 5,040 rupees.
All right, thank you so much for that, Ekta. That was Apollo Hospitals. Pretty decent quarter. The stock was up in the morning, but then lost momentum towards the end of the day. Well, staying with Pharma, we actually had some commentary coming in from Aurobindo Pharma. The company's margin expanded and drug sales are up 14% year on year in the first quarter. However, the US business missed street estimates. The management told us earlier that the US business was impacted due to seasonality, but the CFO of the company is confident that the July to September quarter would be a good one for them.
This quarter, US revenue got impacted by the non-seasonality. You know, as you are aware, that we have a good market share in the antibiotics, and this is not a season, and yet there is a drop in that. Apart from that, as we explained in the earnings call also, because of the remediation action was going on, and because of that, the related production delays have taken place, and because the specialty and injectable performance has come down because of that, which is expected to be resolved in the coming quarter, because we are already started seeing an improved production in this quarter. So this is expected to improve upon it. These are all the two major reasons. And the next season, the next quarter, that is the July to September, should be a good one compared to April to March, April to June. We have been now classified as OAI. OAI is not is going to stop any dispatches or improve production. So obviously we will be able to achieve it. And also we are working on the other markets like Europe and other places. So the business team is pretty confident they will be able to achieve the 600 million mark.
Well, interesting. Ambareesh, what's your view on these pharma names? You know, the ones that Ekta discussed. Divi's was down, Apollo was up, and Auro Pharma, that exclusive conversation. What do you like?
Auro Pharma is the one which I like among them because clearly we've seen market expansion as well as successful product launches. The pricing has been stable. So I think we should see better levels for Aurobindo Pharma. In fact, I have a price target of about 17.25 for this stock. As far as Divi's is concerned, I think one should wait for a while because whatever said and done, as far as the report is concerned of Kotak, I think based on that, we could see levels of closer to about 3,800, 4,000. I think, those are the levels where you should get into Divi's.
Okay. Discuss lots of fundamental cues in stocks and, we've got Shrikant waiting by patiently. Shrikant, thanks for listening in to all of it. Just so busy in the earnings season. So tell us, you've heard about a lot of companies, right? From the miners to Hero, Moto to Divi's, so on and so forth. Any one of these stocks where you think there's a potential long trade, or maybe even from an investment point of view, do any of them look good?
I think, see, at these levels, Apollo Hospital looks good. It is currently around 65, 66 levels. The overall trend of the stock is very strong. No doubt that today we saw some correction from higher levels, but broadly I'm of the view that the stock is heading for at least 7,000, 7,200 based on its technical formation. And overall, so if there is any correction, then it will be a buying opportunity. We also like Natco Pharma from the pharma space. There also we are of the view that it is heading higher and it is forming higher top, higher bottom series. So based on its technical formation, the stock can move to the levels of maybe 1,750 or 1,800 sort of levels, and downside is protected to 1,350 or max 1,400. So these are the two stocks on which we are bullish. I think on the metal space, we could see some correction, but yes, in that, I think Vedanta, in case if there is any correction and the stock comes to, let's say, 400 or 410 levels, then there it's a buy. It is into like some specific consolidation formation, and broadly I'm of the view that eventually the stock is moving towards the levels of 470, 500 again.
All right, Shrikant, today in fact the stock went down to that level of around 407, I think so, and from there it saw a sharp bounce in trade. So we have noted that view, promoters taking the right steps, but let's see if it reflects on the stock price as well. Focusing on the mid-caps today, many big movers. Vamakshi joins us to give us out that list. Vamakshi.
Well, absolutely. The first one is Piramal Enterprises. The company reported its numbers, but CLSA went ahead and downgraded its rating on this counter to an underperform, and they also cut their target price to 860 per share. They say that negative credit cost due to lower provision and one-off gain supported otherwise weak operating performance. Some of the segments in the retail book were continuing to see a deterioration in the 90-plus DPD trend, and they believe that this could put pressure on both growth and credit costs. Jefferies was another brokerage note that came through from for Piramal Enterprises. They too have an underperformed rating, target price of 805, and they say that the earnings recovery is expected to be slow. ROA below 1% and ROE below 4% is what they expect from FY25 and 26. Marksans Pharma is the next name that I'm focusing on, and that is because revenue growth came in strong for the company. Revenue was up nearly 18%. They also witnessed a marginal improvement in their margins. Margins now stand at 21%, and the net profit was up nearly 26%. The stock resultantly surged higher in the trading session today. Last one, HEG, the company reported a very weak set of numbers. Revenue dipped by 15%. Operating profit saw a very sharp cut of 73%. EBITDA margin of 6.7% was at a multi-quarter low. The net profit too declined by nearly 83%. The only good thing that the company has approved a stock split, but that wasn't enough to push the stock higher in the trading session today.
Okay, Vamakshi, thank you very much. Busy day with so many numbers coming through. Quick final question, Shrikant, on Piramal levels to track. And also, by the way, we didn't discuss Mazgaon as well as HAL, two big PSU stocks. Both came out with numbers. The numbers were okay, pretty decent. In fact, I think in Mazgaon's case, the profit has really surged higher. Technically, how do these stocks look?
Yeah, I think so, like both these stocks are into corrective mode. They are correcting gradually from their highs. There is no as such any hurry that someone is liquidating to the stocks and all. They are still available at 20 days, 50 days simple moving average, which means that the overall strength is still on. But I'm of the view that in these two stocks, specifically Mazgaon Dock looks really relatively better candidate to buy for. It is very close to its important support area of 4,600, 4,650. But if there is any pullback in the market and in the sector, then I think the stock can easily come back to the levels of 5,500. So there, we are bullish on Mazgaon Dock based on technical formation.
Appreciate it, gentlemen. Thanks a lot for joining in and giving us the view on a whole host of stocks that we did discuss. For the time being, though, we'll have to wrap up on this edition of Markets Forward. You don't go anywhere. Lots of news and updates coming in on the other side.